Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me to a new week. Having pretty much traded in a whipsaw manner and recently posting an inverted hammer, the market for the Australian dollar is attempting to stage a further recovery. We did see a brief rise above 73 cents, and now the market is still very much focused on the top side of the range for the start of this week as we look for the RSI breaking for the midway point, and also with the 60-day moving average, which currently holds around 73.40. I do anticipate that the market may, from the current structure of the pattern, see a test up towards 73 figure 40, which may give us again an opportunity to see further supply coming back to the market and maybe short positions added, and therefore see a downturn back towards a base that's held for 5 days at 72.25. Nevertheless, let's see how the market starts for this week. It does look a little bit firmer. With the euro coasting sideways also for about 5 consecutive days, we can see that the market still is holding above that 116.75 level. Still, with the dollar still around that 93.20 level, could see a rise this week with the risk of seeing further downside for the euro. If we take that 116.75, we do have Federal Reserve Chairman Jerome Powell speaking, and also along with a couple of officials. So therefore, if we see a break of 116.75, that would trigger a move down towards 116.15 to 115.55 as a broader picture. The ADX is trending. Let's see how it all plays out, with the RSI slightly buckled underneath the midway point. Dollar yen surges higher and now gets to the region around 110.80, that is. And last time we saw it there, good rejection from that period. That was back in August at the beginning, and also further down the track around July. Let's see if the market does play into a bear trap, a bull trap here, that is, and see the market reverse as the bears come back and eventually see a move back towards the main target at this stage is at 110.15 to 109.70. Sterling, as we can see, is a little bit whipsawed as well as it respects the level around 136. Nevertheless, I feel the market might see a brief turn to the downside, but still overall, the weaker, the weekly picture, that is, still holds to a negative pattern. So therefore, the primary is still to a bear case. Let's see if the market does stage a break to the downside, but there's still a bit of work to do and clear this space that's around the lows of 136. Sterling yen rallies on the back of the dollar yen move, and that leg still, though, is contained by that 152 area, as the broader picture is still very much within a 148.90 to a 152, and I do expect to see those gains return and look back towards the support. Gold still recognizing that support around 1,748, even though we did briefly touch a little bit lower than that, but that's bounced respectively, but not quite from the RSI as it struggles around that midway point. I am still holding to a bear case, and I still feel the market likely to test down, with it and a close under 1,748 will give us to see further play to a weaker stance for gold this week. Looks like oil's going to continue on to look to its topside challenge, and that is around the region of $76.40 that was seen, posted back in early July. Over the last 5 days of bullishness, the market still seems to be picking up quite strongly here, as the ADX is still holding very strong. But I believe the market may ease or put the brakes on towards this topside and see a mild retreat, with the support currently holding roughly around 74.5 to 73.80. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed. Great start to the new